Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 23rd of October. 1 week to sell out your shares and other assets before the budget on the 30th. Looking at the FTSE to start off with, we've got this falling trend channel which we've hit the top of a few times since the summer. That line there around 83.50. Below that, we've got the uptrend line there from back in February at 82.30, and presumably the market will remain between those two parameters over the next few days. We do break up. We need to get an end of day close above 8400 or at least 83.50 to have a chance of that. And on the downside, below 82.30 risks not only September support there around 81.65, but also possibly after the budget, if everything goes wrong, down towards the 200-day moving average there at 80.60. Moving on to the DAX, which doesn't have such a cliff edge of destiny coming up. Apparently it doesn't have that. Here we can see that we've topped out through 19,500 and need an end of day close back above that to give us the chance of heading to the top of that channel there, 20,400 by the end of next month. Otherwise, we're looking for a test of support towards the 50-day line and initial October support near 19,000. Might get away with just the 19,300 area, but that might be a bit optimistic. RSI on the right side of 50, though, at 56, so that suggests that any pullback will be mild rather than heavy. Next up is the Dow, and here looking for signs of bullishness in the run-up to the presidential election. We've bounced off recent support, 42,600, and above that, looking at the top of the channel there, 43,600 over the next few weeks. Obviously, again, a political cliff edge in the making over on this market. Worst case is that we have to test the 50-day line there at 41,600 or at least October support, 41,800, but looking relatively steady at the moment. Moving on to Bitcoin, where we've all been waiting for the big break higher at through 68,000. So far we've had a bull trap towards 70,000, which is obviously rather disappointing. Ideally we stay here, don't go anything lower than 66,000, which was the old September peak, but we'll have to factor in and move down to the 200-day line now after the bull trap at 63,400, given that we have disappointed ourselves once again. Clearance of 68,000 on an end of day close basis could take us up to 75,000 by the end of next month, which is that June resistance line projection. Moving on to gold, which has so far not let us down at all, and we're hoping that that will continue. We're looking for 2,800, we were looking for 2,800 by the end of next month. The way things are going, we might get that by the end of this month. This market seems to be accelerating on the upside. The old resistance there around 27.08. So while we're above that, looking for 2,800 to be hit over the next, well, at least over the next 5 weeks, and maybe, as I said, sooner than that. Moving on to crude oil, and here you can see that we're sort of dithering either side of the $70 mark, closed above the 50-day line yesterday, so that does suggest we could have another chance or another attempt at breaking $77, which is the 200-day moving average and basically post-August resistance for this market, but still the chance of a dip down to 64.75, the floor of that falling trend channel from the end of last year, if we fail at the 50-day line. Moving on to the stocks and starting off with Alien Metals, and here we've been bumping along the bottom for quite some time. The old low there from March, April around 0.11. Above that, got the chance of a move to the top of the triangle from June, as high as 0.17 by the end of next month. Still not out of the woods yet, but just looks as though this particular rebound a bit more powerful than previous ones. We've had blue candles all the way off the low there, so that does suggest some interest there. Cordel is next, and here the market just trying to hit the top of that rising trend channel base that we had from back in November. Above that, which is around the 6.5 pence level on an end of day close, looking for up to 8 3/4 by the end of next month. Happy with the rising 50-day line, the gap's higher as well, and the fact that the shares have managed to bounce above the rising 50-day line. That normally shows strength for a stock or a market. On the aquas market, a bit of a bounce with Coinsilium at the moment, and here you can see that We've managed to bounce above the 50-day moving average there. Can't quite see whether it's rising. It looks like it isn't rising now, so that tends to be bullish signal in its own right. That would suggest that we're at least looking for 2.25 pence over the next couple of weeks. Best case is up to 3.8 pence, retesting the January resistance by the end of next month. But what we want to see really is more and more closes above 1.8 pence, the initial October resistance. On to a couple of stocks which are allegedly a Trump trade, a Trump win trade that is. Starting off with Eurasia, which has a rising 50-day line. You can see the last 4 candles there, all clear, all blue, and we're looking for this stock to hit as high as 3.4 pence, basically retesting last month's resistance, while we're above the initial October resistance at 2.5, so above 2.5, really looking for 3.5 there on Eurasia. Next up, Ferrexpo, which is another Trump trade situation here. We're gingerly trying to break through the 50-day line there around 54 pence, and above that on an end-of-day close basis, hopefully today and over the rest of the week, looking for an initial target there at 63 pence, which is the top of the triangle there from April. Best case scenario, if Trump gets to the White House, maybe up to 75 pence by the end of next month. Ideally, all the while we stay on the right side of 50 pence, which is basically post-August resistance, or former post-August resistance for the shares. A decent update from Hochschild today, and what's interesting that it's banging against the top of that rising trend channel, the one that's been in place since November last year. The level there around £2.50, and end-of-day close above £2.50, and we could be looking at £3.20 as soon as the end of next month. The reason for the optimism is this looks like a mid-move consolidation. We already had a gap higher, which remains unfilled, and that looks like a very strong setup. In fact, there might be 2 gaps higher there over the recent past. So this stock looks as though it's accelerating at full tilt. Near-term support there, bottom of the flag around £2.30, so hopefully we can stay above that. On to MetalNRG, which came up with a cracking announcement last week, and the shares starting to regroup after that. Support coming in the upper 40s, and basically our initial target there around 0.62, best case by the end of next month, up to 0.9 pence, which is the upper parallel of that rising trend channel from back in May. We've been onto this basically since the unfilled gap to the upside off the low that we had back in May, so well trailed there in terms of the start of the rally. Pleased to see that all the updates from Rome Resources have been finally taken on by the market. We're at basically the best levels, or actually broken the best level that we had since the stock came to market. That was at 0.35, above 0.35 on an end-of-day close basis, looking for the top of that rising trend channel from July, as high as 0.48 by the end of next month. Added momentum comes from the 2 unfilled gaps to the upside. That suggests that there is a decent re-rate in progress. The other point to note is that we've got the 50 and 200-day lines rising. The run-up to a golden cross, which is what we are heading for over the next week, tends to be the strongest part of the cycle. Moving on to a stock which had a decent run earlier in basically last month. It looks like we're in a little triangle formation here for Sealand, and end-of-day close above the top of the triangle there at 0.14. Could at least be enough to get us back up to 0.18, the initial October resistance, and then we're looking for, I suppose, 0.2 to 0.25 as a target by the end of next month, while we remain above the floor of the triangle there at 0.12. Finishing off with Tower Resources, and here the picture looking encouraging in the sense that we're bouncing off the floor of the recent consolidation around 0.002829. We've already had a golden cross, so looking for the shares to give us a gap fill rebound up to 0.035, and then maybe into the low 40s by the end of next month. But the key here, obviously, staying on the right side of 0.03 pence. RSI rebound off neutral 50 is helpful, and that's why we have an inclusion of the stock today. That's it from me today. More updates tomorrow.